please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're still tuned into Power Breakfast this Friday morning. Well, always an interesting set of numbers to watch out for. FMCG major Nestle will be in focus on the back of its numbers today. Mangalam, what can we expect?
Maggie, yes, but you know, now the days for Nestle are beyond Maggie, because November 2015 was when it was launched. November 2016 last year had the Maggie relaunch in the base. Now the focus is on the new launches that the company has undertaken, nearly 43 in the last 18 months, how they perform in the volume growth, because the management was fairly confident in their con call the last time they did that, and the stock is up 16% in the last 3 months itself. Total income growth 8% higher, EBITDA seen higher by about 2.7%. Margins are likely to come off because of one, higher input prices, secondly higher ad expenses. The company's had 43 new launches and they are promoting it with a lot of aggression. Profit after tax seen higher by about 10%, close to around that 300 crore mark. Revenue growth likely to be led by 7% volume growth in the domestic market. International markets are slightly soft. The gross margins likely to decline by about 250 to 300 basis points, and change in sales mix as well as 7 to 8% input cost inflation may lead those margins lower. Watch for ad and promotion expenses. Most importantly, watch for Maggie as well. While yes, Maggie is in the base, we'll have to watch out for what the company says in terms of Maggie's performance. 450 to 475 crore worth sale in Maggie is seen. And more importantly, I'll be watching out for recovery in their non-Maggie portfolio. Watch out for sequential improvement in the revenues and gross margins. Both those two things are most important given the sort of outperformance that the stock has seen in the last 3.5 months.
You're still tuned into CNBC TV18. Well, the PMEAC meets today after it was constituted and met for the first time on the 11th of October. After that meeting, the council had identified the following priority areas: economic growth, employment, informal sector, fiscal policy, monetary policy, public expenditure, economic governance, agri-consumption and social sector. So what can we expect from the meeting today? Who better than Lata to tell us and apprise us of what we can expect? Lata, morning, over to you.
Morning, Ekta. Well, we were told that what the council will do is, the Prime Minister's Economic Advisory Council, constituted after a 3-year gap, will listen to presentations on each of these 10 areas, which will be probably made by members of the government, maybe the Niti Aayog, and then they will perhaps deliberate on some of them, because all 10 of them they will not. One thing is very sure, although fiscal policy is an important point they will deliberate on, separately both Surjit Bhalla and Ratin Roy have told us that they are not in favour of loosening the fiscal deficit. On monetary policy, we know that the council is deeply divided. Surjit Bhalla is known to have made his views very clear to our channel and to everybody that he expects space for rate cut. Ashima Goyal, the other member, was not so forthcoming on rate cut. She thought that there is no credit demand, so it's not going to really help. I had spoken to Ratin Roy as recently as earlier this week, and he said that he was he strongly felt that capitalization of banks should come contingent on reform of the public sector banks. But if you notice, it is not there in the agenda of in the 10 points for the council. So whether such things will come up suo motu, we don't know. After all, it can be linked to public expenditure. It is public expenditure, in a way, capitalizing the banks. And Ratin Roy was strongly of the feeling that it should be done by the RBI, because the RBI, he thought, was over-capitalized. So, such issues can make their way, but he made it very clear that's not part of the PMEAC stated agenda, though they can suo motu write to the Prime Minister. I think the best way to understand what the PMEAC may do.
All right, that's as far as the PMEAC meeting is concerned, but let's watch out for Axis Bank. Remember, they had informed the exchanges earlier this week that they'll hold a board meeting on Friday for approval of fundraising. Now, before that, CNBC TV18 had told you and confirmed that private equity companies like Bain were speaking to Axis to actually pick up 5% stake. So what may be announced today? Well, Lata is here with a heads up. Lata.
Well, the agenda of the board meeting is known. It would be authorizing the company, the management, to raise capital. Now, we don't know whether the names itself will be announced. All one is expecting is that the amount, an authorized amount will be announced by the board, and it could be well more than 5%. The board can always authorize more, and we know that RBI rules allow one entity to pick up only under 5% in a bank. So the assumption is that one entity will pick up 4.95%. If it is 5%, then it works out to about it works out to 11.87 crore shares. That's 5% of the current total shares outstanding, which is around 240 crore shares. And if you multiply it by 530, you get about 6,000, 7,000 crores. And then the tier 1 ratio, which is currently at 12.04%, can rise to 13.2. If this entire 6,000-7,000 crores come in, then the book value will also rise from the current 247 to about 259 rupees. Now, all these are, of course, estimates about how much profit they will make and how much reserves, therefore, they can raise. It was always expected that Axis has to raise capital because its competitors, ICICI, is slightly better capitalized at 14.85 and has subsidiaries like insurance companies in whom it can, sell more stake. SBI likewise has an advantage of subsidiaries and the government announcing a major recap program. So Axis, it was expected, would also try to come to their level. At the moment, Axis has recognized GNPA of 5.9%, but if you count all their stress watch list and BB minus list, which they have already declared, then it can go all the way up to 10 to 11%. So if they have to provide, 50% of that, they won't provide 50% of 11%, but if they have to provide for, say, even 50% of 8-9% of their assets, then they will need capital, and they're running at a run rate of about 15-16% loan growth. So they will need capital for that. So, you can make your calculations. At the moment, we are going with about 5% dilution.
Okay, well, thanks, Lata, for that. It's going to be a busy, busy day for Lata with State Bank of India, Axis Bank, and not to mention the PMEAC meeting. Yes, but nonetheless, busy, busy day for financials. But moving on, Tata Motors reported a threefold jump in net profit thanks to a strong performance by its UK unit, Jaguar Land Rover. In a conference call last evening, ace investor Rakesh Jhunjhunwala quizzed the Tata Motors management on forex hedging losses and whether it will reduce going forward. Here's an excerpt.
You will incur about, depending on the value of the pound, about 1 to 1.2 billion of foreign exchange hedge losses. Right? Now next year your the rate at which you have hedged will come down and the pound has gone up in value. Suppose for this quarter you have hedged at an average rate of 1.45. As the time passes, the rate at which you hedge goes down, comes to 1.3, 1.29, and the value of the pound goes up. So does not mean that next year, if the currency rates remain what they are, your hedge losses will be substantially lower?
The short answer is yes. If I referred you to the page that Ben was describing, which is a backup page, somewhat what it has, the bottom two lines on the page, not the exchange rates, but the lines that are titled total pre-tax hedge reserve and current portion of hedge reserve. What you see there is what you see there is the total pre-tax hedge reserve is 1092. That's £1,092 million is the outstanding present value at today's exchange rates of the hedge losses we have still to run through over the next couple of years. If you just moved across that chart to what it was 1 year ago, that number was £2.4 billion. So in other words, you can see that for two reasons, the size of the outstanding hedge losses is reducing just as you describe, and it has reduced for two reasons. One, because the passage of time means that we work through this hedge position quarter by quarter, and two, because the exchange rates have changed also compared to the prior year, which means that the value of the outstanding hedge losses has actually reduced also a bit because of exchange rate.
So what rate have you marked?
Pardon me?
You marked the losses at 1.34?
1.34, yes, on the pound to the dollar, yes.
Right. That means.
And we've also shown there. Sorry, just to finish, we've also shown there underneath the 1092. We've shown the current portion, and that's 793 million, is what we expect at these exchange rates to mature over the next 12 months.
Right, so which is substantially lower, because over the previous year, about far more is matured, no?
Yes.
So that means next year, interest rates being what they are, right? The currency rates being what they are, your hedge losses should be substantially low.
Okay, well, that's the Tata Motors management and Rakesh Jhunjhunwala on the conference call last evening. But it is an earnings rush today on Dalal Street. So let's focus on some key earnings expected today from the banking space. All eyes will be on State Bank of India as it reports its Q2 numbers. Abhishek is here with the key expectations. Abhishek, morning.
Good morning, Ekta. So the key number to watch out in SBI will be the slippages. Slippages in the previous quarter were at 30,000 crore. Now, analysts expect slippages to be around 20 to 22,000 crores. So anything below that will be very positive. Now, watch out for the watch list number. The watch list was at 24,400 odd crores. So slippages from there will be seen now, and how much upgradations happen and where that reduces to will be seen very closely. Remember that the restructured book is also around 39 to 40,000 crore. How that behaves will be seen very closely. We have seen across PSU banks, they have reported slippages decline of 40% on a sequential basis. Whether that follows will be seen very closely. Improvement in asset quality will be another key parameter. The gross NPA in the previous quarter was at 10%. So where that moves will be seen very closely. Low cost deposits have aided in PSU banks reporting a higher domestic net interest margin. So the net interest margin, which was at 2.36%, if that improves, will be seen very closely. Remember one point, that SBI Life stake sale led to 5,600 crore of money flowing into SBI. So how they use that, whether they use it in provisions or strengthen their tier 1 ratio, will be seen very closely. Back to you.
All right, Abhishek, thanks a lot for that. But as we speak, let's just take a look at the Asian markets. The Japanese index is virtually at the low point of the day with a cut of almost 321 points. Remember, yesterday too, the Nikkei had corrected about 500 points from the high point of the day. So the Japanese index down as we speak. If you take a look at this, the SGX Nifty, which was indicating a cut of close to 50 points at the start of the day, it is now indicating a cut of almost 60 points at the open. We'll watch out for cues coming in from there, but earnings supreme. And now we have from the auto pack, auto major Mahindra & Mahindra will be reporting its second quarter numbers. Naveen, who was riding a fancy Jaguar Land Rover yesterday, now gets on to the tractors. Naveen, what is there to expect?
Not a bumpy ride, surely, Mangalam, for M&M in this quarter. In terms of the numbers, if you see revenue growth, we are expecting 20%. How does that stack up? 16% growth overall for the volumes, which was led by a 30% growth, 31% growth in tractors. So not much of a product improvement that we are seeing. That is the reason why 4% jump is only what we are seeing in terms of the realizations. Coming onto the margins, see the similar story what other polls were also expecting for other auto majors. We are expecting a downtick of close to 100-150 basis points. Coming at 13% is what the EBITDA margins are for Q1 FY18 as per brokerages, versus a year-on-year comparison of 14.4%. But remember, there's always a surprise element in the numbers that we have seen for all the auto majors, so expect something similar happening for M&M also. Apart from that, PAT growth, EBITDA growth will be clearly flowing into the PAT growth. 6% uptick is what we are seeing in terms of the PAT. Apart from the numbers, two key things to watch keenly will be the product mix that the company will be going ahead with. Remember, a lot of competition in their SUV segment, especially with the arrival of Jeep coming into the fray right now, and also the overseas acquisitions. Company is been talking to us and telling us time and again that they will be looking for overseas acquisition, especially in the tractor segment. So these two announcements will be something which will be keenly watched. In terms of the numbers, steady performance expected from M&M.
Manisha Gupta is here to tell us what's happening in the commodity and currency space. Manisha, morning.
Well, thank you. Much of the cues are coming in from the currency markets really right now, because the Republicans' version of the U.S. tax cut plan differs from what was proposed, and that would mean a slightly more delay before there is an agreement, and that's led to a decline in the U.S. dollar. Add to that the fact that the number of Americans filing for unemployment benefits has risen as well. So you have the US dollar slipping to a one-week low versus the basket of currencies. It's trading at a one-month lows versus Japanese yen, two-week lows versus the Swiss franc as well. So the safe haven currencies are doing well and the dollar isn't. When you talk about the safe havens, well, the gold and silver prices are trading firm. You have gold trading at a three-week high. Uncertainty over the U.S. tax reforms is something that has been supportive for this space as well. What is not doing so well is the industrial metal space. A third straight day of decline is how we have started Asia today. So you have copper trading at a four-week lows. The aluminum has declined as well because of rise in inventories. And the nickel prices have seen the maximum casualty down at seven-week lows. There are reports that China may cut its stainless steel prices, and that's weighing on all the steel ingredients in Asia as of now.
All right, Manisha, we'll keep an eye out on all the cues coming in from the commodities space. But let's take a look at the futures and options space out there. Looks like the bulls rather, haven't yet thrown in the towel. Why? Because over the last three sessions, while the Nifty has lost about 150 points, the Nifty futures premium, that has maintained above that 50 mark. In fact, yesterday increased a little as we recovered from the low point of the day. 53 is where the Nifty futures premium is over the Nifty spot. Not just that, the bulls also went ahead and rode the 10,200 put with a lot of aggression. 10,200 put now has the maximum open interest, so we'll watch out for that mark. And if we do recover a little from the lower end, there could be some support as far as short covering is concerned, because the FIIs, who were 70% long at the start of this series, are now just about 56% long. We have some shorts in the system, so they may lead to some bit of covering. 10,200 put, like I said, saw a bit of writing for a premium of 50 rupees, which indicates that 10,150 could be a support. 10,800 call, after we recovered from the low point of the day in yesterday's session, 10,800 call saw a bit of an open interest flare up with a 5 lakh share addition in the open interest. Watch out for Gen Irrigation, that one comes in the F&O ban, and some fresh long seen on both Indian Bank as well as Page Industries.